welcome back to Lessons in Property with me, Steve Hand. Today, I've got the wonderful Michael Stratton from MS Lending. Hi, Mike.
Hi, thanks for having me, Steve.
Oh, you're very welcome. Good to see you. So for those that don't know, MS Lending are a lender in the marketplace that we know as a very fast lender for getting the job done quickly. Fast, easy and flexible.
Yes.
I've not looked at your website.
No, in one.
In one. So no, really good at supporting clients that have just got to get over the line quickly, and this happens a lot in our game, doesn't it, Mike?
Yeah. No, I think we do get, I wouldn't say pigeonholed into being a fast lender, and sometimes it has its downsides as well, because people, they maybe leave it late in the day to come to us because they know that MS can get it done, but that's what we've set out to do. We've got relationships with auction houses and, you know, with tight timescales and completions. That's how we're set up, and we love it. And often with those situations, it's kind of a closed result, so the client's already committed to doing something. I know typically that's what bridging is, but it means that if it's happening, it really is happening. It's not just going to sit there for weeks and weeks on end. So the conversion's usually pretty good.
And do a lot of clients buy off market or through an auction, or not traditionally through, say, Rightmove?
A mix. So we get a good chunk from Rightmove, a good chunk through auction houses. We do a lot of auction stuff through brokers, but auction purchases. But I'd actually say I've seen a bit of a rise in the private purchase. You're seeing a lot more than ever now, the sort of BMVs and things happening off market. I think being a buy-to-let landlord isn't maybe as glamorous as it used to be. So I think you find maybe a lot of the smaller landlords now looking to maybe move some of that property on to some of the larger landlords. So we are seeing some of these below market value private purchases creep in quite a bit more. Yeah. What is a true below market value is another conversation, but we do see a lot of them.
Well, we started off 20 years ago in the middle of Wigan, in the high street there, and doing main residence mortgages, buy-to-lets. And so we only started to do bridging 7 or 8 years ago, dipped our toe in it. And I guess landlords, because landlords have been hammered a lot, haven't they, over the last decade? They're looking for different routes to market to make additional revenue streams. And they were looking then more at projects rather than that typical, let's buy a property, rent it out, build a portfolio slowly. Yeah. You know, they're looking for commercial assets, or they're looking for things that they can add value to. And that's where bridging just came on our radar, and we realised we needed to embrace this. So we got the right experts on board in the team and went from there. And you came on our radar probably 2021, which is that when you started?
January 21 we started. And I think on that, bridging has, in the 15 years I've been in the space, bridging probably was a bit of a taboo subject back then, and it was people had a mindset of, well, if you're taking a bridging loan, it must be you've either got financial difficulties or you can't get money from the mainstream sort of sources. Whereas now the gap between bridging and it's just become a lot more of a mainstream product, and actually since the base rate rises, the cost of bridging probably hasn't gone up anywhere near the same way that the base rate has, and more mainstream ways of financing. So I've always said that over the last couple of years, bridging's probably never been as cheap, in the sense of the gap between the two different styles of funding that you can go for. The gap's a lot smaller now.
That's right. In relation to the base, what, 4.75 or 5?
4.5 now. 4.5 as of last Thursday.
Yeah. So 4.5 versus, I mean, we used to say typically 1% a month, so 12% per annum. But sometimes you can get underneath that 1%. Sometimes it's above it, I guess, depending on the severity of the case or complexity of the case.
And I think what buy-to-let, you'll know better than me, but buy-to-let rates, 7s, 8s, it's not, maybe challenger banks a little bit less. So the difference isn't, it's not the be-all and end-all. I think the rate is just one part of it. And I think that's where bridging always has been, and maybe people are just understanding it better as the days and years go by, that no one really wants to take a bridge. They're taking a bridge because it's the means to get to the next stage, and that could be hungry property investors that want to scale quickly, and they know that by having a buy-to-let portfolio, it's quite a long game, like you alluded to earlier. But if you maybe use bridging the right way and borrow and then leverage back up once you've done works to the property and refinance and use that money to reinvest again, it can be a really effective tool to either help with your development or help just build a nice vanilla buy-to-let portfolio.
Yeah. Do you know, it's a question I ask people pretty much every time I'm speaking up in Glasgow usually, and the question is, what's the first word that comes into your mind when I say bridging finance? And someone always says expensive. Yeah. And that's it. And so you've got this room full of people. Some of them are converted, some of them are a bit sceptical. Yeah. What I find myself talking about is the things it can unlock. You can target properties that you can't get with a mortgage. Yeah. Whether it's uninhabitable or an EPC fail or just speed's needed. And
that's what we say. We always tell our clients, to use us but navigate the market as a cash buyer. You know, if you're looking at properties that are on the market, use us, pretend you're a cash buyer, go around making offers below market value or slightly discounted. And actually, when you actually add in the cost of your bridging finance alongside it, you've probably got yourself a decent deal, because I suppose cash is king, and if someone can complete within a week or 2 weeks, there's deals to be done.
Yeah. So what's the fastest that you've completed one in?
We have, people probably don't believe, every bridging lender says they're fast, so it's genuinely, it was in, I think it was May or June last year, there was multiple dwelling relief, I think, and they were stopping it, I think at the end of the month, it might have been a June, and we genuinely got the inquiry in on the Friday and completed on the Friday. So a client wasn't certain that with the lender they were going with it was going to happen. It was actually on a commercial property as well, and the solicitor had done all the work. They'd had valuations done. We were able to use the valuations that had already been done. And I suppose with everyone being on it, broker, client, they got everything over to us at 10 o'clock in the morning, straight over to the solicitors. Client went into the solicitors to sign the docs. They were sort of there, ready, waiting. And we had it paid out by, I think, 3:30. So
wow,
that's an exceptional circumstance. But I think for us, we are flexible enough that we can sometimes look at valuations that have been done for other lenders. We have different funding streams that mean that if we want to do something, we can do it. So it's just a question of whether we actually want to do it or not. So if we want to complete on a property with no valuation and do it in 36 hours and take a view on some things, we can do it if we think the deal's right.
So do you have in your funding line, do you have institutional lenders like an RBS type lender, as well as some private funds?
Yeah, so we've got institutional funding lines within the group. And we also have high net worth. So when the business started, we have a lot of high net worth backing, which I think the natural segue was going into institutional funding lines, which we do have. However, we really realised the value that having some of those private high net worth investors had, because like I alluded to before, when I set up MS, and certainly over the course of the first year, I realised that we've kind of made a name for ourselves here because we can do things that other people can't. You're a brokerage and you'll have lenders knocking on your door every day saying, give us business. And I'm sure the first thing you think, or your team will think, is, well, what can you offer us that we don't already have? And we were being able to do that. It was at a time when it was COVID, valuations were really difficult. So us having no val products, or certainly lots of AVM products, desktop products, even for commercial property, wasn't really, you're seeing more creep into it now, but it wasn't something that was sort of widespread across the industry. So when we came to take institutional funding, whilst our institutional funding is good and flexible, it's never going to be the same as maybe some of the either our own sort of bond pots or high net worth pots. So having that has proved to be really, really important for us, because we want to remain, we want to still have that autonomy, that if we like the look and feel of something, it has a home. There is somewhere that we can place it. Yeah, we've got a handful of different sort of pots that we can utilise. We are at an interesting position at the moment we are looking at a more sort of institutional line, but it has to be right for the business, not just, I think what I can see what can happen with lenders, certainly young lenders, if they need new facilities, that you could approach a bank and they give you a lovely term sheet and say, we can give you this amount of money and this is what you have to do to fit our model. And that's something that I've never been keen on. And people have sometimes sort of doubted whether it'd be possible, but I'm sort of saying, well, we need to present to the banks, this is what you need to do for us, because this is how we operate. And if they can, great. And if they can't, that's no problem. But we're not going to change our business model to suit a funding line, because I don't feel like it's almost selling our soul a bit. This is what we are, this is what we're about, this is how we operate. I get there has to be a bit of flexibility, and to access those sorts of pots of capital, we might have to change some small tweaks, but inherently we are what we are, and we'd like to continue that way. So we'd like to try and partner with people that understand the business, understand how we mitigate risk, and get comfortable with it.
Yeah, no, that's great. Yeah, you know your agility, aren't you? Flexibility, and not all funders are going to lend in Scotland. You lend across England, Scotland, Wales.
Correct.
And you've got not that you want to attract loads of low value loans, but you don't have a minimum loan if I've got that right.
You have got that right.
You lend up to, is it 3 million?
Yeah, on paper, but yes.
You can go higher for the right case.
Yeah, so we don't have a minimum loan size. Again, this was from day one. I understand a lot of lenders do have a minimum loan size, and I understand why they would have a minimum loan size, because that £30,000 transaction still touches probably the same number of hands throughout the office as a £3 million transaction. I've always felt it's quite narrow-minded having a minimum loan size, because we might do a really good job on a case that £30,000 one of your team have got, doesn't mean you're only seeing £30,000 transactions. So if we perform well on that transaction, inherently you'll probably get a call in the next week from a client wanting a £300,000 bridge. And if we've done really well for you on that other loan when you couldn't really place it anywhere else or you were struggling to place it, it's likely that you'll give us a call. So yeah, no minimum loan size, which has worked really well for us. And we also like that granular market. You know, whilst we have done larger transactions, we've done a couple over £10 million. Again, it's not what we necessarily advertise, but I think one thing we struggle with as a business is we don't like pigeonholing ourselves into rates or products or criteria. We can do whatever we want to do, and if a £15 million bridge came across our desk and we loved it, we'll be able to do it if we wanted to do it. Just as much as our average loan size last month was pretty low. You know, it was probably only £150,000 in January. I've never been bothered about loan sizes. It's all about units for us. We like granular. We love that risk spread across our book.
Yeah.
So
there's not many lenders like that where well, no, because I'm told regularly, no, our cut-off is 2 million or 1 million, 3 million, whatever it may be. And 3 million is quite a common or popular metric in the industry.
Yeah.
And then you've got some lenders, of course, where 5 million is the minimum. They won't get out of bed unless it's 5 or 10 or whatever it may be. But I like the fact that you've got that flexibility, and I guess that says a lot about customer retention, doesn't it? And you want to work with people, because developers will have that come to you for, say, £2 million facilities or 3 million. Sometimes they're going to be doing those 100 granders or 200 granders or smaller loans.
Yeah, so we've got, there's a client on our book that's a prime example of that. They buy a lot of property in and around the northwest, maybe average loan size of £125,000. We do a lot, but they had an opportunity to buy a portfolio of properties in the Midlands, and it was 52 houses, and they were paying £6 million for them, whatever the figure was. So they came to us for that because we've worked so well with them on the other ones, and we ended up lending them £4.5 million on a portfolio of properties in the Midlands. So it just demonstrates, whilst they might be granular, they also will see opportunities. And we don't want, personally, every lender's different, like you said. Some lenders like the larger loans, and that's their business model. We wouldn't want our book filled with 5, 10, 15 million pound loans, but having that spread is it works well for us.
Yeah, no, great. And of course, asset type, you lend on land, commercial property, residential property. It's not just HMO conversions or
semi-commercial property.
Semi-commercial as well, yeah, mustn't forget that.
Yeah.
They're all different types of assets in different locations. So again, it's so widespread, isn't it? And I know you'll have different LTVs depending on the nature of the property, because risk and all the rest of it. But also you've got that flexibility, like you said, to do a physical valuation or an AVM, desktop, Noval.
Yeah. So what I always say about MS when trying to describe kind of, we don't have a massively wide product range. We do have a few different products, but we're quite vanilla in what we do. But there's quirks within that vanilla. So we don't do development, we don't do heavy refurb, but we do lend to developers, because a lot of developers come to us and say, there's a piece of land with planning that I want to buy. I'm not going to get my dev facility in place in time, but I'd like to use you for the acquisition of that piece of land. Yeah. We do lots of that, which works well for us. Although we don't do development, we still work with developers in that regard. But like you alluded to there, we lend all over the UK, well, England, Scotland, Wales, commercial, semi-commercial, resi, HMOs, and we have the flexibility in regards to valuation type. So we might not do reg bridging, heavy refurb, development type loans, which a lot of lenders do have a widespread sort of product line in that regard, or term lending. But within the bridging, sort of the vanilla-ish bridging space, we've got lots of quirks. Not many lenders can maybe lend on a commercial asset with a desktop valuation that we get in 24 hours. So with no one physically inspecting the asset, you know, we do a lot of those types of lending, and it's worked well. And crazily enough, we were doing some research and some analysis on the book recently. And some of our better performing loans are the ones where there hasn't been full valuations done.
Ah, interesting.
Yeah, that's not a dig at any valuers watching this. I'm not saying that at all. But for us, that granular market where we've got, you know, underwriters all over it doing their comparables, AVMs, etc. They've performed a lot better over the book than some of the maybe larger loans or more quirky loans that we've ended up having full valuations done on.
Brilliant. No, that's really interesting. That.
Yeah.
And of course, you've got your good wife, lady wife working with you, Alexandra, who I met at your do last year.
Yeah.
Has she been in the business since 2021?
Yes, so Alex's background was not in finance, although she has had some finance background through one of the sort of media agencies that she worked with. She did a lot of work with Halifax and Lloyd's, but not in this side of it. She worked in fast fashion for a long time, when MS was set up, and we'd actually had our first child at a similar time. The timing was right in terms of not going back to do that, but coming into the business. And yeah, she runs a lot of the PR, marketing, social media side of the business. And again, probably learned from that. Finance can be bland at times. It's not the sexiest industry in terms of how it maybe presents itself. And we were really keen at the start, and probably with Alex's help, just thinking outside the box a bit, just because it's finance, just because that's the way other finance companies does it. It doesn't have to be bland and boring, and it made us look outside the industry for other things as well, rather than think to ourselves, well, there's a role available we need to hire from within finance. Bringing people in that have worked on different projects in different fields, and showed us ways that campaigns have really resonated well with people in different industries. Sometimes there's no reason that you can't sort of use parts of that in the finance space. So yeah, Alex does an amazing job. I think probably one of the big things that people talk about when they talk about MS is the brand's strong and how well it comes across, and our marketing. And we were always keen as well. We've got quite a young demographic in the office. I think there's quite a lot of legacy lenders out there, and we wanted to be different in the way that we come across as well. When you're looking at the new wave of property investors, maybe in their 20s, 30s, 40s even, that maybe haven't been doing it for 30 years, how can we resonate well with them and find alignment personality-wise in this era of TikTok and finding out things like TikTok's used more than Google as a search engine for under 30s. These are powerful tools that would be naive of us just to think, well, what do we need TikTok for? And I think a lot of that part of the business and the branding side of it and the social media has been really good for us to let people see behind just the brand of MS Lending. Who are the people behind it? What do they do? Show a bit more of a fun, playful side. And I always remember sort of sitting in meetings, and if you've got you might be a first-time property investor wanting to take a bridge, and you come to our office. I think we're not necessarily suited and booted. You're not suited now, and I've been in environments where it's all very much you wear your suit.
Shirt, tie.
Absolutely. And that can be quite intimidating for someone that's talking about a 100-grand bridging loan. And we want it to be more relatable,
more approachable.
Yeah, more approachable. Yeah. And we do that with the way that the way we correspond to customers. We try not to use too much jargon, because it can be really intimidating.
Very much so. I speak to people regularly who are still afraid of picking the phone up to a brokerage or to somebody in finance, because they've got that image of the suit, the tie, the shirt, and they don't like it. So it's getting that, and the words I was going to use for you guys is fun and playful. So I'm glad you've used that, because that's my interpretation of MS. Yeah,
we always try and find the balance. It's professional, we're dealing in hundreds of millions of pounds. We're dealing in large sums of money, and people have got a lot on the line when they're taking a loan with us. So whilst we want to come across as fun and playful, which I think we do, we've got a steely determination to make sure we get things done properly and professionally. But yeah, absolutely. In regards to seeing who's behind the brand, it's important to us that they see that side. That, like you said, the word approachable is really important. And actually, when we're sending letters of correspondence to customers, we try and make it clear and concise, not tons of pages of word, which can be really intimidating for some people.
I'm going to ask this question, but you like me, you've got young kids, business that you're growing, all the rest of it. Do you find time to play golf, watch rugby, or what was Mike like doing?
So when I set up MS, I thought to myself, this is going to be amazing. So self-employed, Friday afternoons, I'll be on the golf course, all these types of things. And it's the complete opposite. Yeah. Football is one passion of mine that I've always had, pre-wife, pre-kids, whilst gallivanting around Europe. Watching United isn't on the cards as it used to be. I still go to all the United home games, which is sort of important to me. It's kind of my release, and I enjoy that with the crowd that I go to the games with. But I'm quite a simple guy. I love spending time with the family. Like you said, 2 young kids under 4. They keep me busy and active. And some of the wiser souls that I speak to all tell me how quickly it goes and don't wish time away. And just like that, they're grown up. So I've started some strict rules now. When I get home from the office, I try maybe between 6 and 7, or 6:30 and 7, just before the kids go to sleep, of kind of phone can wait downstairs for an hour, and whatever calls and emails I'll just do when the kids are asleep. My eldest son, he shouted at me for being on my phone when I was meant to be playing with him. So it hit hard. It really hit me, and it made me feel guilty. I thought, for half an hour before bedtime, all he wants is just to play with me for a bit.
Yeah, so it's a small amount of time to give up, isn't it? And we can work it. I mean, there's 16 hours a day, so
exactly.
we're awake. So and we can find an extra hour somewhere.
And you
can't we?
realise that those times of day, the sort of 7 till 8 in the morning as you're getting ready for school, or 6 till 7 before bed, nothing's going to happen that's so important that it can't wait half an hour or an hour. So
No, great, thanks, Mike. Any questions or anything that you want to get across to the viewers here?
Yeah, I think, like I touched on before about product-wise, and I think it'd be remiss of me not to mention, for example, whilst we are fairly vanilla and we're known for our speed and flexibility, we've recently brought out the 85% product, which for developers or for people that are doing property refurbs is really good. So, it's an 85% day one bridge on a light refurbishment. So not where there's planning permissions involved, not where you're knocking the back of the house out and doing an extension, but for light refurbs, new kitchens, bathrooms, new flooring, paint, etc. We had a lot of feedback from brokers that there's a couple of lenders that are doing 85% day ones, but it was more challenger banks, so it was still full valuation. So for us to be able to do 85% day one bridge with AVMs, desktop, and that normal speed, it's taken off, and it's been really, really positive for us.
And you've not got like a minimum 3-month interest period, have you? Like
we don't have any minimum
Right.
No, we don't have any minimum period for our loans. Yes, so there's no time. You can keep it for a month and pay it off. And we do actually have a daily interest loan as well, where customers that maybe are coming to the end of their term with another lender, they don't want to pay the fees for going over term. We have a daily interest loan that they can take the loan for 21 days, 46 days. They only pay for the amount of days that they've kept the loan. So
that's
a true daily interest loan. We try and listen to feedback. We're not here to... I'm quite keen on not having a huge wide product range. I'd rather be known to be kind of the specialists at one. So if a broker like yourselves know they've got a client that's bought a property from auction, your mindset straight away is that's what these guys do best. They're amazing at it, and there's a big market there for that.
That would work really well for a lender. There's not just one lender, but there's one I was talking about last week to a group of people. So utilising, say, MS for the quick bridge. It's only a light refurb, so you could be in and out of it within weeks. And then this lender, after 1 month, will let you refinance to full market value.
Oh, wow.
So you can submit the application to the lender inside the month, and they'll complete on it anything from 1 month after legal ownership. So it works brilliantly with bridging. If you're getting below market value bridges, you're just adding a little bit of light refurb to it, refinance onto the mortgage, keep it in your portfolio.
Amazing.
No, great.
Good.
Thanks, Mike. Thanks
No
for coming
problem.
on.
Thank you.
And,
Enjoyed that.
There we have it. Michael Stratton, MS Lending. See you next time.